Hey folks, Nick here, recapping the week to see how we did on our ranges. As you know, before every week starts, we publish the ranges for the week and then we update them daily to see how markets are changing their minds. These ranges I don't just make up. I read the tea leaves, mainly the open interest, and I tell you where I think prices are going to go or prices are range. In other words, so you can use some iron condors or maybe some credit put spreads that are bullish or some credit call spreads or how to defend your existing positions or not. So every week we'd like to look at them. So but before we do that, let's look at the week in general. Started with a scary open on Monday, and then stock rebounded and went crazy on the Yellen rate hike, which was not right. And you can see all the trend lines held up. All these lines mean something, and you can see they come into play. I say it over and over. And we ended the week about where we started with the scary moment. Friday was very, very bad for the bulls. Pretty much that is the S&P, that is the Nasdaq. This is oil, which went nowhere, even though it went a lot of places in between. Red in general, and these are the small caps. You can see it's all the same. This is Google, boom, and recovered and closed somewhere in the middle. The only not the same is this guy here, which is the best company on the planet, arguably, right? This is Apple. Started scary and got scarier. I've told you for a while that we have levels. We've said don't chase the 120. We said 113 at one point, 113.40 I think was significant, and then if that was lost, 112 and a half, that was significant from a while back. And then this descending broadening wedge that I drew recently, I think if I go up to here, you can see it, we drew it up here, and look at that, it carried through. And if I extend that white line, you'll see that it was the lid here too. So these lines, and remember that yellow line I added a while back about 118.40. Yeah, I forgot what that level to mention. That was a pivotal line for a while, and they all came into play right there. So fighting the line down below it and above it. Okay. So anyway, how did we do? Let's pull up the statement, and this is the week ending 12/18. And let's see if we can. Whoops, wrong way. Sorry about that. Too much. There we go. And I think I need to, sorry folks, this is live TV as they say. Oops. Oh my gosh. Okay, let's start with here, SPX. SPX, I have not reviewed my notes, so we're doing it on the fly here. Several magnets. I knew that the 1995 to 2000 was the strongest magnet, and we opened the Monday right at it, and we ended right at it. So I don't think I need to read the rest of it. I know I said there's support below and some upside pressure to 2040. Let's read it. Support on the way down, resistance on the way up. That was the 2000. So yes, drawn to it, but once we get to it, it should act as support, and it did. Smaller magnets at 1950, we didn't go there, and it's also upside pressure from 2015-75. I said there's going to be upside pressure from here. What does that mean? It means that the markets at some point would want to go there if they can, but if they get there, resistive. See that? If we get there again, and boom, we got to it. Perfect. I mean, perfect. They were leftovers, I said, at 2100 plus, but those were leftovers from bullish times. Small upwards pressure from 2025. I also said there might be some upwards pressure from 2025. So I said up, 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 and that all worked out, but it all came back to the one big magnet, which was right here. Okay, this could not have been more perfect. All right, so let's see if we can scroll down a little bit without me messing it up. All right, the SPY, I imagine the same statement. 211 plus is all resistance. We didn't need it, so I said everything up here is resistance. The bear pressure starts at 210. I said the bear pressure starts at 210. A magnet at 205. Where's 205? Right here. And if I look at it, it's exactly in the middle of the action. So they were torn. I said it was resistive, so if we get to it, it was going to start resisting, and it did big time. This was a very bullish day, and then we completely erased it. Support, which is upside pressure, 202, 23.5. I said support will be here and here, and it was until Friday. and then 199.2 through 95 each strong. So we had support lower, but we didn't need it. There are a lot of people that left money here. Okay, so this was good too. I mean, this is tradable, especially in the SPY. It's $1 wides. Those are good for weekly trades. I'm not doing weekly trades because they're just a hassle right now with all the headlines, but I'll come back to them. NASDAQ, upside pressure to 112.13. There's going to be here, and we started the week and we went to it. Anything lower than 110, that's supposed to be support. Anything lower than 110 is support. It worked out. Standout was 104. We didn't need it. That was a huge support level. 115.5 is all resistance. So anything above here is all resistance. We didn't need that. So other than the misused word there, I know it makes a big difference, but anybody who's following me would figure it out. So plus I do remember fixing it in the rest of the week. All right, so Apple, what a disappointment that was, right? I bet you we got it wrong here, maybe. 15 was magnet. They tried, they couldn't hold it. A smaller magnet at 110, so we knew that there was going to be attraction to here. Support if we get there. It held until it didn't. Friday was absolutely terrible for Apple. But we knew that there was a possibility. We've been talking about it to come back to 105. They wanted it. So, okay, some expecting 105 to be tested, and they will be rewarded at the open because the open was scary. I mean, these guys made money at 105 right there, even though this is 110. But the 105 is they bought it for pennies. It turns into like 20 cents. Suddenly, they quadrupled their money, and then it turned into $1 probably at the end of the day on Friday. If I want to protect against short-term sell-offs for Apple, I can buy cheap debit put spreads, which would have made money. So even though the range, the 110 didn't hold up, we knew about it and we said how to defend it. We did a good job there. Okay, RUT. Magnet at 1145, so they wanted to get to here and they did. Support at 1095, so we didn't need it. The support was below here. Upwards pressure from 1180, but seems too far from here for me. Scattered small resistances there on after. And so basically, we're still range bound in the RUT, and the battle was up at 1190 because remember in 1200 I said 119, 120 IWM. Okay. So this is still standing. That's where everybody missed it. Everybody's looking at all the exciting stuff to look at. Where they missed the battle was right here in these two. Most visible in the 119, 120 IWM for the last 3 weeks we've been talking about, maybe more. All right, IWM, which is also the small caps ETF here. Support at 110, and that was it. And 108, we didn't need it. Nothing else significant lower. So basically, if they broke the 108, the bears could have gone down. But the bears are not even on the field. The selling is all bulls, my friends. Upside pressure for 114. Look at that perfectly. So support, we went to the upside pressure, meaning markets wanted to go up. Big magnets at 119, but those are left over. 120 held under extreme pressure. Okay, so this was tradable. I would have put a credit call spread over 120, and a credit put spread somewhere around 108, and collected 10 cents from each side. You say, oh, what is 10 cents? 10 cents is like 11% on each side, so you end up the week with 20+% yield on your risk. Even though it's only 10 cents, if you did 10 contracts, you paid for your car for the whole month. You paid for the gas for the whole month. You paid for groceries for the whole month. And you did 20+% yield in 1 week. The last year, the SPX did 13% all year, and they had to work hard for it. This year they're red. Apple's red return on yield. So somebody that bought Apple, they're red. You did this in 1 week. You did 20+%. 10 cents is a lot. It doesn't sound like much, but it's a lot on a $1 wide. It's over 10% yield. People underestimate it, but you have to place it right and manage it properly. Google. Okay, I've been saying for a while, don't chase it beyond 780, even though it's a headline stock. Don't chase it beyond 800, and it's held a rocket. Okay, 740, 770 still the neutral range, and 740 there, 770. That's the neutral range. So no surprise there. Small downside magnet, small support at 730. It held, but it had other support. I've been saying it has sentiment support. Everybody loves it these days. But that's the scary part. I'll give you a note here. 790 small resistance. Okay, so this one is also good. So I think that we did not have any breaches, but because I made a misspelled error, I won't do an A plus. I used, I said resistance, where is it, wherever, here, and I obviously meant support. So we'll just leave it at an A. Okay, so here's the thing that nobody's talking about. I've mentioned it, you probably remember it. For the last year, or recently, I can guesstimate that the top 5 stocks in the Nasdaq are more than half or more than half of the size of the index. We got Apple, Google, Facebook, Amazon, Microsoft, I think. And I know the top 4 are like 35% of it, and the top 5 should be 15. I mean, an extra 15, but people say 35. I don't know where to get that number. I'm just guesstimating that it's a good chunk, close to half. And they've carried the market. And the top, say, 10 in the whole markets have carried the markets up to here. What if, what if people decide to sell those and book their profits? There's so much new profits in these stocks, like Google. If Google went from um, Okay, Google took a couple of huge leaps up. What if one day they decide that, you know what, we've had enough of Google. I smell a rat in the market and I want to book my profits. All of these, they're new profits, and these are what I called weak hands. Like if I was here and I wrote it up to here, and I see it coming down here, I get out because I still have half my profits. I'm a weak hand. I'm out. If I was here, I entered and I came up to here and started falling, I may get out. Those are weak hands. So what if these people decide to book their profits? That will whoosh. And if the same happened with Facebook, and if the same happened, look at that. Yeah, now these people are waiting. All these are okay. We're okay sideways. What if boop, they start breaking down from here? They say, oh, there goes my profit. Whew, gone. And these guys will get out as soon as we hit here, because down here they're even. Down here they're losing. And if they get out, these are still green and they're losing their greens. Okay, so keep that in mind. I'm not saying, oh my gosh, it's coming. I'm saying if it comes, it can be fast, because so far I think that the bears haven't even started the pressure. They haven't renewed their shorts. They're just booking profits like I did. I sold credit call spread all year long, and I've told you about it. And now they're just expiring, worthless, and I'm booking some profit, paying pennies to close dollars. Those are booking profits. I haven't started reissuing shorts big time. And if I were, I would put downward pressure on the market. I mean, tiny, but 1,000 people like me make up for a lot of pressure. So the bears have not started to sell. I'm not perma bear, but giving the thesis, the only trades I see that make sense are bearish trades. So I go longs when I can, and I short when I see it fit, and I do. So keep that in mind. All right, Nick signing out. Any questions? You know where to reach me. Talk to you later.